Hello, Warriors. So basically, a follow up on the narrative that was talking about Friday in the stream and the past couple weeks. Um, Viewers that have been following me knew I got long euro down here, got out at 111, told people to look for 107 as the next possible long entry. We're almost there. 107.08 is 61.8 back. I'm not going to just automatically buy it here. I may put out a feeler, but I'm thinking that we could possibly stretch to 78.6 or between the two, 106.5. So what I'm going to be keen on is this recent breakdown, which I talked about as well in pound dollar, that we were threatening a downside breakout. We never got the short squeeze to take out the stops. So this breakdown under 126 measures, I have a target down there around 123.5, which is going to be above the highs that we put in last summer. But 123.5 is 61.8 back on this whole move that we've had from here to here. And it's going to shake out a lot of people because there'll be stops here under 125. I know they're going to gun for those. So watch this blue line in the days ahead around 123.5. That'd be a good place to attempt it. I've been talking 64 in the Aussie, which is 78.6 back, 63.98. Aussie holding up better than both cable and euro. I'll be probing it down here and give it a try. Taking a look at USD CAD continuing up, I think we could go, I've been talking about 136, 137 in USD CAD. And then in the last week or so, I put out a buy in US dollar MEX, and it was before the Fed. I said, if you have a chance to buy it around 17, that was the level. We got down to 1703. Close enough for government work. Looks like it's developing a flag. If we get through the 1740 level, there's 1790 in it. And if we ever have a big risk off scenario, US dollar yen should continue. US dollar max should continue higher. Here's the dollar. I was talking about 105. We're starting to diverge a little bit on the 4 hour, but I would say you still have to give it the benefit of the doubt as long as we're above 103.80, which was the resistance it cleared after the NFP on Friday. I said be patient with gold. I thought that we would still get a flush under 2,000. Still believe that. Silver took out support at 2240. Next target's around 2120. That's the bottom of a big triangle. So we'll see what happens there. Platinum's recovering a bit today, but when you look at it, it still could be vulnerable, and that's another reason to avoid. And we're trying to hold these lows. Maybe we will. But platinum should lead the way on the upside. I wanted to talk a little bit about yields, which are really the driver, and why I'm a little hesitant to start fading dollar strength right away. So here's a scenario. We almost got all the way back to retrace. This was a 40-bit move, and we put in a higher low. So I'm thinking that in a correction from the highs at 5, let's go to the daily. So it's hard to fight yields, and everything's going to have a hard time going up while yields are headed higher. I'm looking at this as being ABC for A, and then we had a pullback for B. And if this is C and it's some fib extension of this, let's call it 1.618, it would be 64 from this low, which would take it to 345, 435, 440, 440, which is 50% back. Maybe we're even going to try 61.8, but I'll go with this for now. So until yields reach this level, caution being long almost anything because it's competition. And this is the level where I think the dollar should start peaking out and yields turn down again, despite what Powell said on 60 Minutes, and then yields begin to decline. So I'm viewing this as this was the first wave down in rates, and now we're correcting that 120 bip decline. And part of the corrective process could take yields back to 440, which is something I talked about here. This surprised me, but the way it held and then exploded after the NFP on Friday, I have to give the upside the benefit of the doubt again. I believe that's why you're seeing a stronger dollar and weaker metals at this time. Looking at the market, I think between here and 5,000, 50, 30, the S&P's top. My one trade in stocks that I'm looking for on the week is Apple. So this was earnings right here, and it was a stop hunt. We took out the two lows here. 190, 192 is where I'm going to be looking to sell it. It's coming in up to 188, even with the market lower. So I'll be watching action here, maybe into a turnaround Tuesday. Here's the opening. So we're opening at 88.10. But with the market making new highs, we were almost breaking down here in Apple. So even if the S&Ps go to 5,000, which is 50 handles from here, and we don't make a new high again in Apple, I think we're finally going to resolve this thing under 180, and that we could be trading, 164, 160, sometime into March. I'll see everyone in the room. Remember, don't just count your pips, count your blessings. I have a great interview lined up Wednesday with Bob E. Unlimited, a CNBC contributor. So don't miss that. That'll be at 10 a.m. EST. And I'll be with Mike tomorrow at 11 a.m. EST. So see everyone in the room. Bring your best work in there. Iron sharpens iron. Adios.